Afternoon and welcome back to the SRA's Compliance Conference. I often ask myself what possibly could be better than an anti-money laundering session. Well, the answer to that is two anti-money laundering sessions. And yes, on Monday we had an AML session covering off some of the key things you needed to know about AML, and we covered some of the regulations, what's coming down the line, and SARS. You can watch that on catch up if you want to. But now we have the sequel to that session. Let's call it AML 2. That might be the worst film ever, but hopefully this will be a good, useful session for some practical tips, digging into some of that practical detail around AML. Now, we totally recognise law firms have a lot of competing pressures, no more so than in the current world we exist in. And we know you want to get it right, but it can feel like there's a lot to get on top of. So hopefully this session will offer you some practical tips and insights. Now, the panel today we've got is split into, I suppose, two equally good halves. In the first half, we have Colette and Zoe, who both work at the SRA, and they're mainly going to be talking about what we've found from our reviews around firms and what good practice looks like in some of the key areas around AML. And then in the second half, we're going to get more of the sort of law firm perspective from Emesis and Susie. There will be the opportunity to submit questions, and we anticipate quite a bit of this session having Q&A. Now, you can do that through the link below. Just click on the link. You can submit a question. You can submit that anonymously, or you can tell us who you are. That's even better. And we'll try to get through as many questions as possible. We've also had some pre-submitted questions. So, as I say, we'll try and get through as many as we can. You can also tweet about this session on Twitter, and you can do that using the hashtag #KolbKoffer. So on to our first speaker, that's Colette Best. If you were here on Monday, you'll see she's the only star who survived to come through to AML2. But just a reminder to introduce her. She's our Director of Anti-Money Laundering here at the SRA. She had a background in financial services, policy, working at the Association of British Insurers and also the Building Societies Association. She's worked on preventing money laundering for over a decade now, and that included working on the implementation of the third money laundering directive at the Royal Institute of Chartered Surveyors. So, Colette, over to you.
Brilliant. Thanks ever so much, Ben. And thanks ever so much for joining us again today. Bonus points to anyone who also listened to our first AML session on Monday. So I think to kick off, I'd like to start off by recognising this has been an incredibly difficult year all round. You guys have been dealing with compliance while moving staff to work from home, working in a very strange housing market and getting to grips with the various government schemes. So on top of all of that, I can completely understand why there might be a feeling of weariness and the feeling that AML regime is just red tape to add to your burden. But I think now more than ever, we need to focus on what we're trying to do, which is preventing crimes such as drug trafficking, people trafficking, or illegal wildlife trafficking. And what we know is that criminals are very good at adapting to new markets, and we're getting intelligence that actually criminals are already seeking to exploit COVID and the lockdowns for their own ends. So in addition, there's a reputational risk to both firms in the sector of money laundering failings. So think about the damage that was done by the FinCEN files recently, as well as the Panama Papers, and the relatively small number of firms involved with those, which had a massive impact on the reputation of the sector. So with all that in mind, we are looking to increase the AML checks that we do. But just to be clear, our first priority isn't to catch firms out. Zoe is going to talk a little bit in a moment about our programme of monitoring in a bit more detail. But I think I would stress that we would always try to resolve problems with firms through engagement rather than creating conduct files, except in serious cases or if we're finding that the firm won't cooperate with us. And there's lots of resources out there to help. So we produce lots of guidance. So there is the risk outlook that was updated and published on Monday. So please check that out. We've got warning notices. We've got a suite of information on firm-wide risk assessments. We've got AML Q&A online. There is the LSAG guidance, Legal Sector Affinity Group guidance. Briefly, notes on COVID and on 5MLD changes. And full updated LSAG guidance, hopefully coming this side of Christmas. Today, we've also published some guidance which Zoe will be talking about in a bit more detail, which is setting out what we found from our first year of visits to firms. So if I can have the next slide, please, Matt, on AML supervision. So I often get asked about how we actually supervise anti-money laundering. And if you attended the session on Monday, you probably already heard this, so I won't labour the point too much. But we provide guidance and information, which I've just set out. We investigate allegations of money laundering or failure to comply with the money laundering regulations. But our focus today really is the proactive supervision that we do, and there's a number of strands to this. So we do desk-based work to call in firm-wide risk assessments and policies, procedures, controls, and files, and we do that on a rolling monthly basis. We also do thematic reviews on themes that are of particular interest. So we've just done one on the new widened definition of tax advisor, and there's some guidance that we published just a few weeks ago on that, so please do check that out. That will help you understand whether you're in scope of that new definition and some of the red flags. And next year, we're planning to do a thematic review on the role of the money laundering reporting officer and money laundering compliance officer. And then finally, we do visits, which under normal circumstances would involve going into visit a firm, but which of course are happening remotely. And Zoe is going to be talking in a moment about our findings from our first tranche of those visits. Can I have the next slide, please, Matt? Which is, what are the basics to get right? So what do you need to do to comply? So the most important legislation that you'll need to be aware of, which I'm sure you know, is the money laundering, terrorist financing and transfer of funds, brackets, information on the payer, regulations 2017, which we will just be referring to as the money laundering regulations. So I'm going to assume if you're attending this event, you probably already know whether or not you're in scope of the money laundering regulations. However, the definitions did change slightly in January of this year. So I'd particularly draw your attention to the expanded definition of tax advisor. And as I said earlier, we put out some guidance on that to help you decide whether or not you're in scope of that definition. We often get questions about what to do if you're doing work both in and outside of scope of the regulations. And there's really no right or wrong answer to that. We see a number of approaches. So one approach is where you would basically hive off work outside of scope. You didn't do any checks on that. Or we see cases, firms where the firms would apply the anti-money laundering checks across the board. And as I say, there's no right nor wrong approach here. It really depends on what works for your firm. I think what I would offer a word of caution about is allowing firms to come in through unregulated services and then being able to access AML regulated services without doing customer due diligence. So there's a real risk of passporting there. And just to speak briefly, so there were two new roles set out in the 2017 money laundering regulations, the money laundering reporting officer, the MLRO, which has a reporting function, and the MLCO, the money laundering compliance officer. And that role is responsible for overall compliance. And I think one thing I would say is that these are two really important roles, and it's really important that the people in them are fully trained and fully on board with your AML regime. And then the other thing to mention briefly is that you need to know how many beneficial owners, officers and managers, or BOOMs as we call them, within you that you have within your firm. The definitions in the regulations aren't terribly helpful from a legal services perspective, but it's your responsibility to make sure that you know who your BOOMs are, and your BOOMs need to be approved by us to work in the firm. And Susie and Amethyst are going to be talking a little bit more about booms later on, so I won't labour that point. So could I have the next slide, please, Matt? So we're going to have a quick poll of opinions now before we move on to Zoe speaking. So it's intended to inform debate. It's not a test. We have no way of knowing who submitted what answer, so please don't worry about that. Also, don't worry about getting it wrong. This is intended to be a scenario where there isn't really a wrong answer. So the question is, your client is buying a residential property and they tell you that their funds are coming from savings accrued from their salary. What further steps would you take to establish their source of funds? And can I have the next slide, please? So these are your options. So the question again was, your client is purchasing a residential property. They advise that funds are coming from savings that have accrued from their salary. What further steps would you take in regards to the source of funds, if any? And your potential answers are either A, accept the client's explanation of where the funds are coming from, B, request bank statements to show that funds exist, or C, collect bank statements and further information necessary to also satisfy yourself on the client's source of wealth. And we're going to be talking through the answers to these at the start of the Q&A, so please stay tuned to that. So I'm going to now hand over to Ben, who will talk you through how to cast your vote.
Yes, thank you, Colette. Hopefully some of you may have already worked this out, but there is a link beneath the broadcast with, I think, poll number 1 on it. You click on that link and put your vote in. To reiterate, voting's anonymous. It isn't a test. We're not going to come knocking on your doors if we don't like the answer you give. In fact, we won't know which doors to knock on because it's anonymous. So you'll have a while to vote, as Colette says, and we'll come back with the results later on in this session. So while you do that, I'll introduce our next speaker, which is Zoe Allen Robinson from the SRA. She's our AML Proactive Supervision Manager. She's a qualified solicitor who worked in private practice, specialising in criminal and public law. She moved into the SRA's General Counsel team and advised on the implementation of the 2017 money laundering regulations. And she's going to talk through some of the proactive work the AML team here has been doing, including our work sort of visiting, reviewing firms. So over to you, Zoe.
Thanks, Ben. And thank you to Colette. I would echo, our awareness of the challenges that firms are currently facing, but also say, how well firms are adapting, and we've certainly seen that in the engagement we've been doing. So I'm going to go straight into my first slide, please, and start with a quick update on firm-wide risk assessments. So my team call these in on a rolling bi-monthly basis, as Colette mentioned, and the intention is to continue doing this, as we find these documents are a really good indication of firms' wider AML compliance and understanding. And I'm pleased to say we've seen a general improvement in the quality of these and a better understanding of the purpose of this document. I would stress that it's in your interest to make this a useful document, particularly with its links to the level of due diligence you must apply under Regulation 33, where you've identified an area as high risk in your firm-wide risk assessment. We're also seeing that where firms are using templates, this is in a much more tailored way. However, there does seem to be a tendency by firms to focus on the areas we have highlighted as high risk, and in some cases legitimately marking these as not applicable to their firm, but then failing to actually risk assess the services you do provide. So just be really mindful, if you are using a template, we know it can be extremely helpful, but make sure that you still cover off all of your clients' transactions and services specific to your firm. We're also finding that transactions and delivery channels are still the two most common areas that require guidance from the team. In terms of transactions, I'd encourage firms to start with, what does a usual transaction look like for you? What's the size and value? Our checklist that's published online may prove quite helpful to firms here, and that will help you determine what is outside of the ordinary for your firm, or what level of risk your usual transactions pose. Similarly, with delivery channels, in previous exercises, a number of firms said they only saw clients face-to-face, or the majority of clients. Clearly, this has changed very dramatically with COVID-19, and firms need to ensure that this is reflected in your firm-wide risk assessment and that you cover all of the ways in which you provide services to your clients and any risks that they may pose. So moving on, please, to AML visits. So we've today published our findings in the form of a report from our latest round of visits. And I want to focus on giving you the highlights of the report and also the areas in which firms struggled with. So you'll see that our visits involve 74 firms and that over 60% still required some form of engagement, and 9 firms were referred for enforcement action. Hopefully you'll see that this is a shift in our focus, as Colette mentioned, and part of the role of my team, in that we use a lot of our resource to bring firms into compliance by way of giving detailed guidance and feedback. And our engagement can include requesting firms update their AML policies, and we will then review revised versions to ensure compliance. We also requested, in some cases, that firms agree to a compliance plan to rectify any shortcomings, such as requiring a review of live files to ascertain the extent of a lack of customer due diligence. And this is done within set timeframes agreed with the firm. It still isn't a formal process, but it can be quite helpful with guidance from our team on what amendments need to be made. And we then consider the results and provide any recommendations to ensure we've brought the firm back into compliance. And what I would say, as evident from the figures, is that the very high majority of firms we saw clearly wanted to be compliant and took their AML obligations seriously, hence the focus on engagement rather than enforcement. And I would like to take the opportunity to say thank you to the firms involved for their flexibility during the lockdown period. And I'm also pleased to hear that a lot of firms found the exercise helpful themselves. So in terms of referrals, I know you'll be interested to know, when that would be appropriate. And this tended to be because we saw a systemic lack of compliance, such as at least 50% of the files we reviewed showed serious issues, such as there being no due diligence present or matter risk assessments on files. Or it even included some instances where there was a total lack of compliance framework, so there were no policies, controls and procedures in place at all. In terms of some more specific details, as Colette alluded to, there was also a situation where there was concerns around cooperation, and a money laundering compliance officer didn't appear to understand their obligations and was failing to carry out the role properly. But also we saw instances of serious breaches by senior members of firms, for example, heads of departments failing to carry out sufficient AML checks on a politically exposed client from a sanctioned jurisdiction. So if we could move on to the key areas that we engaged with firms on, you'll see those on screen now. In terms of audit, this was where firms frequently misunderstood the requirement for an independent audit and particularly failed to test the effectiveness of their AML regime. With regards to screening, this was where firms were generally compliant with the requirement to screen employees on appointment, but were failing to conduct ongoing checks. And with matter risk assessments, this was where they were variously incomplete or inconsistent with the firm's own firm-wide risk assessment, or they'd not been completed at all. And in terms of source of funds, this is where fee earners made few or insufficient inquiries into where the funding of a transaction had come from. So I'm not going to go into detail about what the regulations say. I am going to go into a bit more detail about those 4 areas. But this is set out along with our findings, our expectations and good practice and areas of improvement in the report. So I would encourage you to have a look at that and be able to concentrate on the areas that might be more relevant to your firm. So if we could move on, please, to audit. You'll see on the screen there that we've put some bullet points about what we're looking for and what isn't enough. I think the starting point is that firms will need to be able to justify if they don't think an audit is necessary under Regulation 21 because of their size and nature. So you can ask yourself here about, can you be sure that there's sufficient oversight at a senior level? Do you have particularly high volume or high risk work such as conveyancing or deal with high value transactions? In terms of size, excuse me, Do you have multiple offices, or do you have a structure that has mid-level management overseeing work that could mean senior management are removed from this process? And if you determine, yes, we do need an audit, this doesn't mean it has to be external, although for some larger firms this may be more appropriate. So if it is internal, you just need to make sure it's not your compliance team or those that wrote your policies, controls and procedures involved in their review. And it must involve an element of testing the effectiveness, so file reviews and potentially interviews with your fee earners. You may find that you already do some of these things via accreditation schemes or file reviews, and you can bring that together and identify if there are any gaps for you to fill. But it's important that you have written records of your decisions in this area and of the outcome of your audit. It is mandatory that an audit produce recommendations and that these must be monitored. So moving on to screening now, please, on the next slide. So you need to be mindful that this is both on appointment and an ongoing basis. And in the report, we've tried to highlight that there's many no-cost options that firms can be doing, such as checking regulatory history with us for both your qualified and qualified staff and undertaking appraisals. We're certainly not expecting firms to DBS check all of your staff. You will need to take a risk-based approach. And although in terms of what isn't enough, we've mentioned only doing screening for conveyancing staff, whilst there needs to be an element of screening across the board, the extent of checks may differ. And indeed, that could be good practice. For example, if you decide you're only going to DBS check your finance and account staff, or those staff with a higher exposure or risk of misusing the firm. But whatever you decide, it's imperative you maintain records for what steps you decided to take and when those things must be renewed or refreshed. And so moving on to matter risk assessments, please. So again, you need to be clear about what you're expecting of your staff with matter risk assessments, and it must align with your policies and processes and flow from your firm-wide risk assessment. Fee earners must have access to the customer due diligence and understand the matter risk assessment inclusion and conclusion if this is responsible by the centralised team. So this is more relevant for larger firms, but you need to be confident in the ability to undertake ongoing monitoring if you are separating out some of those functions. And also making sure that your process allows for the mandatory areas that are considered high risk and require enhanced due diligence under the regulations. So pay particular attention to Regulation 33. And then finally, please, the slide on source of funds. So we found that a number of firms require source of funds checks as a regular part of their customer due diligence. And this may be good practice or easier, certainly easier to evidence for firms, as obviously Regulation 28 is not always helpful in this area in terms of framing as where necessary. And we're hopeful that the revised legal sector affinity group guidance will be helpful to firms in this area, as we know it's an area that firms struggle with. But the key point that we really want to stress is that does it make sense? And it may be you don't require extra documents from your client to evidence this. If you're a firm that rarely consider it necessary to obtain evidence of source of funds, unless it's an enhanced due diligence matter or a politically exposed person, you'll need to be mindful of how you're achieving your other obligations under the regulations, such as assessing the risk of money laundering in any given matter. And in some cases, this will be difficult to do without understanding the source of funds, or in some situations, indeed, the source of wealth also. And if you're rarely undertaking source of funds checks, you could be putting yourself at risk of allowing criminal property into your client account, or assisting in a transaction where you do not hold funds that facilitate money, but also facilitate money laundering through setting up the transaction, and therefore the risk of committing an offence under Section 327 of the Proceeds of Crime Act. In terms of what checks are involved, this is of course a judgment call, and some firms have found it helpful to document this in their policy in terms of setting a minimum bar for what they expect in terms of company accounts, audited accounts for a corporation, for example, or bank statements from an individual. and an explanation. It may also be a deed of sale if it's coming from another transaction that you want a copy of on the file. If you have an established client and you understand the transaction, it may be simply sufficient to note the file and refer to documents you might hold elsewhere on other files. But the key is not to just take your client's account at face value. We're all used to, as part of everyday life, having to provide documentation, and evasiveness to provide it or changes in their account of where the funds are coming from can give an indication at an early stage of red flags. And I'd also air caution if you were leaving this to a later stage in a transaction, as it could give rise to a legitimate poor service complaint from the client if obtaining these documents caused delay to their matter and they were not previously informed they would need to produce such documents. So the final point I'd make before moving on to another scenario for you is that I've noted we received a question around foreign bank statements in another language, and whether these need to be translated or if you can rely on the client's explanation. And that's come from Bev. So again, I would say, there doesn't need to be a blanket approach to this. And we certainly wouldn't say it's necessary for firms to incur further costs. The key is, does it make sense? So it might be that figures that you can see and where they're coming from is sufficient, accompanied with an explanation from the client. Or you may also have somebody in the business that can translate those for you, give you an indication of what those documents are showing. So just make sure that you note the file of what you've considered, and we've seen some great examples on the files of firms doing this. So if you wouldn't mind moving on to the next slide. So this is just reiterating what Colette mentioned earlier. As I say, the report's been published today and there's lots of information on our website we hope you'll find helpful. Specifically, there's some Q&A around how to deal with customer due diligence with COVID-19. But if there is a specific situation that we haven't been able to answer, then I really would encourage getting in touch with our professional ethics team, who are also solicitors and should be able to assist you on individual matters. And so moving on to a continuation of the scenario that Colette mentioned. So I've just reiterated the starting point around a client purchasing a residential property and that they've advised you that the funds are coming from savings, they've accrued via their salary. You've now obtained bank statements and you see a large payment from a third party and you ask the client about this and they advise it's a gift from their parents. What further checks do you do, if any? And similarly to the first scenario, there's not necessarily a right answer to this. We're trying to raise discussion about certain areas we know are challenging. So you've received the bank statements and there's a payment from a third party. Client has advised this is from their parents. And moving on to the options, please. You'll see there's speaking with the parents and accepting their explanation of the source of funds. You accept the parents' explanation at B and you obtain identification and verification documents. You speak with the parents, obtain ID and V and bank statements confirming the origin of the funds. Or finally, you speak with the parents and obtain bank statements confirming the funds, but you don't do any identification and verification. And I think, Ben, you're going to talk, remind people how to vote on these. Thank you.
Yeah, absolutely. Thank you very much, Zoe. So exactly the same again. You should see a link to the second poll below with the options. Click on it, submit your vote. Again, totally anonymous. And again, we'll come back later to have a discussion around that. So thank you. Just before we move on to our next section, and we've already got some questions coming in, so I thought I'd pick some of those up. And I think this first question is likely for either Colette or Zoe.
Yeah.
You talked about the reviews you're doing, and when you call in AML documents from a firm, do you provide feedback on all of those? What's the process?
Yes, so actually just shortly before the AML team was created, we did an exercise where we called in 400 firm-wide risk assessments, and this was in part to inform our view and be able to produce guidance for the profession. So in those situations, we didn't provide detailed feedback necessarily on those documents. However, we're in a very different position now. So if it is a request you've received from our team, and it will be very clear from the letter, then we will indeed be providing detailed feedback on the documents we've received. Even where we're satisfied it's compliant, we'll give some good feedback guidance and I highlight any good practice as well for the firm. So yeah, that's across the board from our team. I'm sorry, Ben, I didn't hear you there. It cut out.
Yeah, of course. So it's back over to me, Colette. So why don't I run back to some of the questions that we've been asked by people over the course of the initial part of our presentation. So let's talk a little bit then about electronic due diligence. That seems to be something that is coming up a little bit. So one question that we've had is the SRA happy with biometric services being used as part of AML procedures, or do you always require a human interaction to satisfy your requirements? Are you happy to pick that one up, Zoe?
Yes, certainly. I think inevitably there's always going to be an element of human involvement necessary. However, we have seen varying types of electronic checks that can be done. So you need to be clear on what that service actually provides you with. So whether it's not just identifying somebody exists, but we're noticing, there are tools that are particularly adapted for potentially with COVID and not seeing people face to face that do have a verification element to it. But again, we strongly suggest that you are aware of the limitations or the extent to which that you can use electronic due diligence and on what sources of information, and also being mindful of any manual override as well and where you set potential tolerances. So I think there are some that do more than others. But we tend to find that there needs to be that element of checking, but the extent of which could in some cases be quite minimal, depending on what that service provides.
Thanks, Zoe. And I think just to add to that from my perspective, the human interaction can actually be where the error is introduced. So if you're using electronic verification, make sure that you're spelling names right, really important.
Absolutely.
Make sure that you are getting the answers that you expect. And I think, Ben, you're back in the room.
Just to check, is there any static from me anymore? I mean, I don't like my voice at the best of times, but it sounded like that was even worse than usual. So, well, it's good to be back anyway, as I'm sure, Colette, you're relieved that suddenly you're not chairing the session anymore. So let's just go on to one final question before we go have a chat with Emesis and Susie. So I think the question I was asking before technology overtook me was, is AML only really relevant to firms who handle client money?
So I think I kind of touched upon this a little bit, but no is the short answer, and that's because the Proceeds of Crime Act is drafted, for one, that's drafted so widely that facilitation could be in terms of setting up a company or trust where the money, it doesn't pass hands and you still facilitated the transaction. And similarly, what's caught under the regulations would not always require you to handle the funds. So firms do certainly need to be aware that by not having a client account, that doesn't remove the risk, and actually if that that shows potential misunderstanding of the position as well, if firms believe that. Okay,
that's great. Well, let's move on to we've heard the regulatory perspective, so let's move on to more the law firm's perspective. Now, Emesis and Susie both have experience of dealing with AML at the coalface in the legal sector. They know what it's like to be in a high pressure environment of a law firm, perhaps coming under competing pressures from clients and partners alike. So we're going to have a little chat with them to discuss their tips as to how to make sure you do the right things to make sure the door is closed on money launderers. So first, to introduce Emesis Saba. He's been on the Law Society's AML task force since 2012, and he's been chair of that task force for the last 2 years. He's also chair of the Institute of Money Laundering Prevention Officers. He also sits on the government's Economic Crime Private Sector Steering Group. You're obviously a busy man, and while he's doing all that, he also has managed to have a number of anti-money laundering roles, both in financial services and the legal sector. And then moving on to Susie, who's also competing with Emesis for being the busiest person ever. She's Global Head of Financial Crime and Sanctions at Freshfields. She's also been a member of the Law Society's task force for over a decade, and was, like Emesis, previously a chair of the task force. She's also a delegate for the Law Society to Council of Bars and Law Societies of Europe on AML. So both impressive CVs there. So thank you for joining us. What I suppose the logical place perhaps to start in our conversation, and Zoe touched upon it a little bit as well as Colette, but obviously there's been a huge impact in everything we do in terms of coronavirus. What's your view on how that's impacted on law firm compliance in the AML space? And shall we start with you, Susie?
Thanks, Ben. I think it's really encouraging to hear the SRA making the right noises about their understanding that this is a key concern for people, and the increased pressure that it's had on firms. I think that is a very, very welcome comment to make by the SRA, because we have faced a number of challenges, I think, in the legal sector, not just in the legal sector, the regulated sector as a whole. And, I break them down into three separate categories. The challenges in relation to client due diligence that arise, the new suspicious activity that we might be seeing, and the other sort of fluffier topic of team working, and making sure that we can actually work together, because that does also have an impact. And so I'll make some observations on these three areas. In terms of client due diligence, obviously with us not being able to meet people and have meetings face to face, that has presented challenges. And I think I will defer to Amesis, who is going to make some comments on that aspect. But some of the things that we've also seen are an increase in impersonation fraud, and the fact that because you're not meeting people, there is a risk of increased impersonation fraud. And if you are a larger firm who has a separate compliance team, it might not be something that the compliance team will pick up as part of their due diligence, because the impersonation fraud, the characteristics of that might actually be the fact that somebody is not prepared to go on a video call, and that's not necessarily what the compliance team might see, and they're avoiding video chats, and also cross-checking the domains of email addresses, and cross-checking what is that, the spelling of particular names or the organization is a key facet of that. And that is something that you actually have to get out to your fee earning teams and not just your compliance teams. If you're in a smaller firm and you don't have those compliance teams, obviously these are things that you do need to be considering. But there are some risks in terms of impersonation fraud that perhaps some of the larger firms might not have fully appreciated. So it is something that you have to bear in mind. The flip side to that is that, particularly if you do deal with individuals and you deal with vulnerable persons, you can't just assume that because somebody isn't able to go onto a video chat that's necessarily suspicious. Please do be thinking about the elderly. If I think about my mother, there's absolutely no way I can get her on a video chat. It's all accidental. It's all by chance. So please do bear that in mind. And also, people who are disabled, and you have to factor those things in. So I think for me, on the client due diligence thing, it's to take a step back and think about it, be aware of these issues. But as Zoe has really, really impressed upon us, it's about a much bigger picture, taking all the factors into account and making a determination. And I do appreciate, and I think we all appreciate, that this is a challenge for everyone in terms of getting on top of things and new information that's coming out. But, in essence, this isn't about the regulation all the time. This is about sort of, really understanding whether or not you yourself feel comfortable with all of the circumstances. And that's a key thing, to not get bogged down in the minutiae of the legislation when we're thinking about, these additional things that you have to be doing in a period of COVID on client due diligence. The second aspect is the suspicious activity and the new issues that have been cropping up. There's obviously situations where that don't look right in the context of countries having been in lockdown and various businesses being, struggling businesses. Now, you can imagine that you start to see an increase in insolvencies and advice on insolvencies type situations. But if you've got businesses that you would anticipate would be particularly impacted by this. So, for example, travel businesses, if you start seeing huge sums of money being transferred, that's obviously an area where you have to question it. I'm not saying in every single circumstance this is going to be a problem, but please do be aware of these sorts of things. So, again, common sense approach to, is this a business that might be impacted by, adversely impacted, and does the transaction that they're proposing make sense? The other thing that we've, that has tended to happen, and we've all read about it and we've all heard about it, is the abuse of the government loan schemes and the government support schemes. And that's not just in the UK, that's across the board that this has been happening. And so, you have to look at this closely. There will be technical situations in which somebody perhaps has, provided incorrect information by mistake. That's obviously something that you need to work through. But at the other end of the scale is the deliberately fraudulent, seeking to actually benefit from these schemes. And those are the ones that are really, really important to pick up upon. I mentioned insolvencies. These are the situations, we are seeing more of that. And it generally tends to be the situation that in insolvencies, other things that have been going on in a business sort of come to the fore as well. So don't forget that if you see an uptick in insolvency type work, that is something that, you should be alert to, and just be aware that, these things can happen, and be alive to that, and consider your obligations under the Proceeds of Crime Act and the reporting, and the need to get a defence against money laundering as well. The final thing I mentioned was awareness and team working. And I think, in this space, it is always good to be able to talk, particularly because, we're talking here not about following rigid rules. It's about, what's your comfort level, and being able to talk with other people is a key facet of that. And it's a key way to make sure that you're covering all bases, and that, you're bouncing it off somebody else, getting a second opinion. And I think in this environment, it can be quite difficult because you're not in the office where you would ordinarily just raise it as part of a conversation. But I would, on a practical level, make sure that you maintain some dialogue for this. If you have a meeting on something else, a virtual meeting or a phone call on something else, do ask. And I think that the final point I would make is, the Law Society of England and Wales do actually have various conferences and that sort of thing that they do, and they have smaller groups. And it is a good way to get in touch with other people, to bounce ideas off them as to, what might we do in this situation? Because I think the general theme that we've heard from the SRA is there's not always a right answer. This is about you thinking about things and documenting it. And so please do keep up, the dialogue on these issues, because I do think that is a really key issue, and it's something that can get lost when we're all sort of sitting at home and working in a little silo.
Thank you, Susie. That some great points there. And yes, the challenge around bouncing ideas off each other isn't actually just an AML issue. Actually, it goes across loads of work, and I think we've all experienced that. And I'm sure we could do a whole separate session on good ideas in that space. Perhaps I could come to you, Emesis, in terms of client due diligence and sort of further stuff to add in that area. We've got quite a few questions coming in around, client verification and use of biometric services and the like. Do you want to just run through some tips from your end?
Sure. I'll try and wrap in questions that we also received from Catherine and Mohammed as well as I go through this, and following on from Zoe's chat earlier. I think the key is that using electronic verification is not a requirement. It is a very useful tool. As Zoe said, I think one of the key elements is being able to understand it. Now, no one's saying you have to understand every algorithm of how it's working, but if the system you're using is just giving you red, green, and amber, you need to be able to explain when Zoe knocks on the door how the system is coming up with those things. What are the parameters? What is it looking for? What's satisfying the system? And those need to be things that really set by you. If somebody's reviewing the information, how are they interpreting the results? Effectively, it is not good enough to just point to a website that you've looked at and say, this said it was okay for me to take this client on. That will probably not be enough. You will need to be able to explain how it's got to those answers. Which leads to the, can you still use the old-fashioned method? Can you still get a passport? And obviously in current times that is challenging, but not impossible. One practical tip that we found works very well is to request a copy of a passport or driving license, a photo of it, and another photo or a selfie of the person holding the passport up to their face, so you can see their face and the passport or the driving license in question. Passport's sometimes a little easier because it's a bit bigger. I know some people have requested video clips, but I've always found that if you do the picture, it's much easier to store and to pull up on request and to provide to others as and when needed. With the electronic verification, you also want to bear in mind that if you ever need to passport that client to somebody else or to send that ID, you need to be careful that you understand any contractual restrictions that may exist, and that's especially important if reliance is going to be a factor. I hope that helps.
Yeah, no, that's great, Emesis. And let's move on to the another topic which always attracts interest, and Zoe touched upon, is the other side of the coin, I suppose, employee screening. What are your thoughts on the requirements there and what firms must do?
I think it was really encouraging to hear Zoe's comments on that. I think most firms have a really good handle of it out of the gate. And I think the bit that a lot of firms are getting to grip with is, well, what do we do after they've been with us for a year, 2 years, 3 years? I think it's safe to assume that the SRA is not suggesting that everybody in the firm needs to be screened every year or every 2 years. I think the idea is to be able to demonstrate you understand the risk potentially people play. So we are not, in the same way that you wouldn't apply the same standard of client due diligence across all your clients, you wouldn't carry out the same level of screening across all of your employees. And in case you get any partners who are trying to be smart Alex, I would almost certainly suggest that the SRA would consider partners within that same bracket. I'll be delighted to be corrected, but I'm pretty certain that they would see that. With that in mind, it's almost a similar thing to what you would do with training, being able to risk assess that these are the individuals who pose the greatest risk and therefore need to have the most screening. For smaller firms, that could often be making sure that you have a Google and to make sure that you can find as much as you can. It can be making sure that you've amended any contracts to say that if people do anything untoward, they've got to report that. But just that on its own, I think the SRA's view is that that's not likely to be sufficient. Pure self-certification is unlikely to cover you. But that at the same time doesn't mean you need to DBS everybody. You might want to DBS a group or a certain number on a rolling basis so that you capture a percentage of your team or your departments over a period of time, focusing on those that pose the highest risk, your compliance, your account staff, any IT staff with super user type access. Okay, that's really helpful, and that I think really helpfully builds on what Zoe said before. Let's move on to a topic again which we're getting a number of questions in around, which is sort of source and funds and wealth. I was going to come to you, Susie, for your thoughts on that, but I'll just throw in, there's one question we've had live, and so maybe Susie or Emesis, you might want to think about this as well as sort of generally talking about this. We've had a question: what sort of source of wealth, sort of funds checks do you recommend, if any, from corporate clients? So take that when you want to, and more generally, Susie, if you just want to talk about sort of practical tips in this area.
Yeah, so I think, and forgive me for going back to basics on this, but I just want to talk about source of wealth and source of funds independently, because I think I view source of wealth is just having this general understanding as to how, an individual or a company has managed to make their way in life, so to speak, in the case of a corporate, how it's managed to survive as a business. Whereas source of funds, I tend to look at in more of the transactional context, which is where is the actual money coming from for the particular thing that you are doing at that moment in time. And I make that distinction because sometimes those two issues do get conflated, and that leads to confusion. And I think, first of all, source of wealth, that generally tends to come up more when you're doing the due diligence piece, when you're first looking at the client generally. And it is good to have an understanding of how a client makes its money. If you're looking at a corporate, what's its business? How did it start out? If it's been around for a while, is it the same business model? And just having that general understanding is fairly key. I think if you start to look into the higher risk categories, you might ask more questions about, what is it actually doing? Where is, what are these transactions about in order to obtain that comfort? Or it may be that, your concern isn't really so much at the level of the corporate entity, but at the beneficial ownership level, because perhaps you have a politically exposed person there who has invested a substantial amount of money in a company, and that might be where you ask your question. And I think overall, what you're really looking at is, what has come out as part of your sort of due diligence and risk assessment process, and from there, that is where you might start asking the questions. Do you understand enough about the corporate? In the case of individuals, it's the same sort of question. It's, what have they been doing? Does this transaction that they're going to do, and then we're starting to get into the transactional aspect, but does it make sense for them overall, knowing what you know about the individual? And then when you actually look at the transaction itself, is where's the money coming from? Because you will have situations in which it's bank finance. And the question there is, okay, well, the money is coming from a bank, and so therefore you're comfortable as to that. But what is it they're doing in order to obtain that? Hopefully they're not, lying, because we've all seen sort of situations where perhaps people have obtained mortgages by fraudulent means. So I think it's very much, it's difficult to give one answer to this. It's about looking at the circumstances, but the starting point is really, what's the risk? Do you understand enough generally about them? And then looking at the particular transaction and making sure that you have that level of comfort in the particular circumstances, and going back to you, and we'll see the results of Zoe's question on this, but very much the message that Zoe said is, it will depend on the circumstances. And it goes to my point that I made earlier about, take a step back, common sense approach. And yes, the regulations are there, and yes, you have to comply, but don't get so bogged down in, ticking those boxes that you can't see the wood for the trees.
That's a really helpful point to end on that one. Emesis, have you got any sort of practical examples to bring in here, or further advice on this?
I think I'm eager to echo Susie's points. I think there is a rush to what the question we so often see is, what do I need to ask for? And I think the key part remains, you've got to understand the story. You've got to understand the story before you start working it out. And where that can often be in terms of making this as practical as possible, I think if you've got somebody who just asks for, this is the set documentation we ask every time, that's likely to be something that you could fall foul of if the SRA says, well, why did you ask for this? And that's especially going to be an issue if there's a big disconnect between the team that's getting the information and the team that's doing the work. And I think sometimes it's so important to make sure, as Zoe said, that the legal teams have access to the ID, and there needs to be some controls from a data protection perspective in relation to that. But if not all of your pieces of paper, the team doing the work need at least a summary of, hey, these are the key factors that you'll need to bear in mind with this client. This is how much the client makes. This is where they get paid. That way, if the team doing the work spots something that is unusual, it's unusual vis-a-vis the information you've gathered. If they don't know what the information you've gathered is, that's going to make their life harder in terms of tracking that. That doesn't necessarily mean they have to read through pages and pages of bundles, but they need the key information. They need to be able to do it. And then they've got to ask the stuff that, does it make sense? And effectively what you're looking for there is, if the SRA say, why did you take this one on? You've got to be able to explain why it made sense and why you were comfortable with the information you had.
Okay, that's really useful, Emesis. And I think you were talking about teams there, and I see we've had a few questions come in around sort of small firms and sole practitioners, so we might cover them in a bit. But we're now going to move on to probably my favourite acronym in the legal sector amongst a very large pool, which is BOOMS, which I think was mentioned earlier on, beneficial owner, officer or manager. Susie, can you just again, is there anything to add to what Zoe said in terms of the requirements around BOOMS, and how should someone go about identifying who their BOOMS are?
I think, yes, the legislation, as Colette and Zoe had said, is not the easiest to follow. And I would highlight at this stage that the definitions of officers and managers is slightly different to other definitions that have been given in other contexts, particularly when you look at some of the other SRA requirements as well. So I highlight that specifically because it's not always noted. In terms of beneficial ownership, it's a fairly obvious sort of concept. I remember when we were first asked by the SRA to identify who our BOOMs were, and there was a process, and every single partner at Freshfield, who was based in London, was presumed to be a beneficial owner and manager. Now, I'm going to give credit to Colette and Zoe because this was not their doing. and Colette was actually a bit of a saving grace in the process, because we were looking at it sort of thinking, well, when we look at the definitions, this is really about who's managing business, who has the management of the business. Now, if you are a small firm, the fact that all of your partners might actually be presumed to be beneficial owners is not sort of perhaps wrong in a sense. But when you start moving into the medium-sized firms and the large firms, then the question of who really is a BOOM, you really have to look at how does your firm operate, and who is in the management, and also can you justify that conclusion that these people are the people who are responsible, having regard to how your firms operate. And one of the difficulties with the legislation is, as with a lot of the legislation in relation to money laundering, it's all focused principally on compliance by financial institutions. All of the language fits with them. It doesn't necessarily fit with how law firms are structured. And so that does present an additional challenge. But I think, the smaller your firm, perhaps, the presumption is correct that it is your partners who are the managers, and you might want to factor in anybody else who has some sort of, management influence over the business. And in the larger firms, you're starting to look at, who are your management bodies, and those people. The final point to make is, and it's just the quirk of the legislation, it does say a manager will include your money laundering reporting officer. And also, when you think about the money laundering compliance officer, the definition of that is by its nature somebody who is involved in the management. So those two individuals will certainly be a BOOM, as it's called. So I hope that's provided a little bit of guidance. But it really is about working out who are the the business decision makers, and making sure that they are the people that you are recording, and also that if it doesn't look, if essentially you've justified it so that it doesn't look odd, where you to receive questions from the SRA. I mean, we keep coming back to the same point. This is about record keeping and recording why you have made a decision. Does it make sense? And sometimes as you're writing it, you might change your view as to whether or not somebody else should actually be added into the mix or taken out.
Thank you, Susie. And I suppose I should give a shout out that there is, we've published guidance on BOOM definitions on our website. That's the SRA website. So that might also be helpful if you want to look into that. I'm also pleased, Susie, that you think Colette's done a good job, because this phone call or conference could have turned slightly awkward if the opposite had been true. But no, shall we just move on to, we've got a load of questions coming on, and I'm going to come into that. But I suppose just to round up this conversation, any final practical tips that Susie or Messis that you think you'd like to share with firms that might be valuable for them in terms of this area?
I think all I would add, because I know you've got a lot of questions to cover, is I think there does need to be a bit of a step change amongst some firms who are possibly autopiloting. We always ask for a passport and utility bill and tick a box. And I think those days need to be a little bit behind us, and people need to be documenting, following through on the guidance. I think the new LSEG guidance coming soon, if there is one practical tip I leave you with, is when it comes, it's a bigger beast. It's a different to what you've seen before. You got to read it. There's a lot there, but I think it will be really helpful for you. And if you're an MLCO, that's effectively going to be your guide for the future.
Okay, that's great, Emerson. So let's move on to some of the questions we're getting in, and then we're going to go on to the scenario votes. But I've got a couple of questions, and I promised I'd cover off some of those questions more in relation to small firms. Obviously, I know a lot of small firms or sole practitioners are going, well, this all sounds very well and good, but I don't have big teams of compliance people. So a couple of questions on that is, do you expect small firms, sole practitioners to carry out external independent audits, or would an audit by the MLRO be acceptable? Anyone want to come in on that question?
Yeah, so I'm happy to come in. I mean, I think it's important to stress that a couple of these requirements are size and nature. So when we talk about sole practitioners, if we're talking about actual sole practitioners that don't have employees and other offices, that's not really going to be necessary or appropriate for the firm to do, and they're sort of left with a position that they are sort of auditing their own homework. The report does touch upon some practical tips around, you could have a reciprocal arrangement where you're a smaller firm, and certainly from some of the small firms we've met, they're actually quite keen to do some form of audit, because it all goes hand in hand. If you've done some sort of review, you tick off the other issues that we've seen firms suffer with about source of funds and matter risk assessments. So yes, certainly not suggesting firms should go and spend a lot of money to do this. Just have a look at, is there another firm that we have a reciprocal arrangement with? Do we have a practice area that isn't as closely intertwined with the AML compliance work that could do that review? So I think starting point on both independent audit and screening is it appropriate to the size and nature, and rare for sole practitioners is it going to be, and then working from there, versus the firm-wide risk assessment requirement, which is for all firms, and we've seen some excellent examples of sole practitioners because they know their business obviously better than anyone else. So yeah, would flag that too.
And I suppose just to build on that, and someone else might come in, we've had a couple of questions, more generally saying, well, small firms obviously are more limited in their budget, they can't necessarily buy in help. And I think part of the point you're making, Zoe, actually sometimes the risk assessments we've seen from small firms and sole practitioners have been some of the best we've seen, because they know their business itself. They're certainly not outsourcing that risk assessment. But I suppose, what other tips are there for small firms in terms of that proportionate approach and it not becoming totally overwhelming compliance in this space?
I think there is an element here of really considering whether it is needed. The size and nature test is there to help you, and hopefully there's not a lot of guidance as to what the size and nature test is. I think I've always taken the view of, if it is such that all of your partners know everything that's going on in the business, as in they have full visibility over everything, then you may be of a size and nature where such an audit isn't required. If you've got sort of 4 partners, small, everybody sees everything, everybody knows what's going on, then you've got full visibility. Effectively has full visibility of the work and the clients and the client due diligence and the work that's going through. The other thing to think of is even if you don't need it under the regulations, there is so much to be gained from having a review. It may just be that you consider how often you need that review to be done and how it's done. I think the reciprocal agreement is one. There are obviously client confidentiality issues if your firms next door to each other, but I think there's ways in which that could be managed. But I think there's a lot of best practice from getting those reviews done. If it's not needed, you may not want to be as in depth. It's up to you to also determine how often you have them done. These aren't necessarily annual things. It could be every other year. If you feel that there's not much change in the way you work, then you could even do every 3 years, as long as you were able to show why you thought that was okay. And if even ironically, if there is a lot of change, you may need a little bit of time to make sure that any changes or recommendations that have been given to you have been put in place and action.
That's great, Emerson. And I'm going to ask just one more question before we move on to the scenarios and where the voting ended there. But it's a question, I suppose, slightly linked because it's about source of funds. Now, the question is, while we might ask for source of fund evidence for transactional matters, what about higher risk non-transactional work such as TCSP work? And not as good an acronym as BOOM, but that's trust and company service provider work. I think, Susie, did you want to pick up that, and then maybe someone from the SRA wants to build on it?
Yeah, I'm happy to make a general comment. I mean, I think, when you look at this, it's not necessarily about source of funds for the particular, transaction, because often when you set up a company, you perhaps, it depends on the circumstance, but there might not be a significant amount of capital behind it. But I think what you have to do if you are a trust company service provider is understand who is setting it up and why they are setting it up. We've talked a lot about beneficial ownership and opaque beneficial ownership. And one of the issues that has cropped up is the fact that there are a whole host of companies out there that have very murky beneficial ownership chains there. So whilst you're looking at this, it's looking at it in the round and actually understanding is, do you know why these people are doing what they're doing? And if there is some capital behind it, then yes, understand where that capital is coming from. And I made a comment on a similar sort of forum, that you really have to look at the entirety of this and making sure that you are not being used to set up a structure where the beneficial owner of record is not actually the true beneficial owner, and there is somebody in the background that you're actually dealing with the real beneficial owner and not a nominee. And in terms of tips on that, you might want to just do a little bit of a search as to who the individual is that is setting up the TCSP and setting up the company, and make sure that they don't appear to be a shareholder of 100 other companies, because that might be an indication that perhaps they are not the true beneficial owner in these sorts of circumstances, and they might be some sort of nominee. But yes, I mean, it's not just about source of funds, it's about everything in the round when it comes to setting up companies, making you really do understand true beneficial ownership as well as where capital might actually be coming from.
Thank you, Susie. Oh, sorry, I'll go to you, Colette, but thank you, Susie. I think actually you're ahead of the game, because we just had a question from Catherine, which was asking that exact question. But Colette, do you want to build on that answer?
Yeah, I think I'd echo everything that Susie has said. So I think, the level of due diligence you're doing should be directly related to the risk that the work poses. So whether or not is a transactional piece of work, that is one risk factor, but it is definitely not the determining factor for risk. So just because something isn't transactional doesn't mean that it's low risk. And I think in the example, the question was, it's a high risk trust and company service matter, and the due diligence should really reflect that. I think with all of this, the basic questions that you need to be asking is, where's the money coming from? Where's the money going? What is the purpose of the transaction? And making sure that you really understand all of those points and acting accordingly.
Okay, that's great, Colette. Well, shall we move on to the scenario? Because I don't want to hold off the results for that much longer. Thank you for everyone who voted. We had well over 200 people who voted, so that's great. And let's remind ourselves, just the scenario was the client's purchasing a residential property, said the funds have come from their salary, what steps might you take in regards to the source of funds? So the results for that scenario were, there were two options that were far the most popular, which was B. 10% of you said you'd request the bank statement to show funds exists, and then by far the most popular answer was C, with 87% said they'd collect bank statements and any further information necessary to also satisfy on clients' wealth. Does anyone on the panel want to comment on those results?
Yeah, I mean, I'm happy to jump in. I think what I would say is we've spoken a lot about understanding the transaction. And I would stress that having a starting point in your policy, for example, when evidencing source of funds for an individual, we will get 3 months of bank statements. That is obviously helpful to whoever is conducting that, so they have a starting point. And I think the results are exactly where we probably want them to be, and obviously others on the panel can comment about that. But, you know, you may receive 3 months bank statements from that person, and you can clearly see, okay, there's so much salary going in a month. It, you know, it tells you the employer. And that equates to things like their age, which you might already be aware of, and that's it, you know, job done in terms of source of funds. And I think the fact that people have erred towards C is really good, because in some cases that we're probably all familiar with, you ask for bank statements and all it shows you is money coming from another one of that client's account, and that's where it starts to become, you know, when we talk about documents necessary, any further information necessary, it might mean, oh gosh, okay, I've got to get that bank statement now, so I'm still not clear where the origin is. So that's why I think we've spoken a lot about does it make sense. But I think, you know, having some sort of starting point for staff accompanied with once you're satisfied is probably that point to go.
Anyone else want to chip in from the panel?
Yeah, I think I'd add one sure way to annoy a client is, and whether you're a large firm or a small firm, is ask for some stuff, and then have a look at it, and then go back and ask for more, then wait and go back and ask for more stuff or different things after that. And I think that comes back very much to the knowing the story. So if you're going back to Zoe's comments just now, I think if you know where they are and what they do, think about the documentation which will help show that as quickly and easily as possible. So that might be getting pay slips. If you're looking to confirm the ownership amount or the amount they earn, that could be the easy way, and that avoids the risk of monies from different accounts, or them saying, yes, here are my bank statements which don't show you what you want to see. So being really clear with people and helping them understand why you're asking for it. I think people are used to being asked for documentation, but there's still a frustration of how dare you suggest that I'm in any way untowards, and 3 months worth of bank statements is a lot of paper potentially, especially if like most people, all of your documentation for that sort of stuff is online. But I think thinking if you understand the story as well as possible, that can really help you hone down to working out what do I really need to be able to show or demonstrate that this makes sense.
Yeah,
thank you, Emphasis. I
was just going to say, I agree with Emphasis, obviously trying to minimise disruption to the client where you know what you're asking for. And it goes back to Susie's point, though, as well, about that specific transaction. So what is it I need to show the financing for that specific transaction?
I think there's been a risk that people see this as a tick box exercise and just gathering a piece of paper. And, you know, I think lawyers are generally, as a group of people, we are an advisory group of people. We like to talk, we like to communicate. So, you know, I think that's an important point, and it's a practical point to bring into this, which is talk to people about this, get your understanding, and talk to them about what they can provide as well that might satisfy this particular aspect. Because, you know, going back to all of this is, you know, in the vast majority of cases, you're dealing with people who are not money launderers. What you really need to do is to make sure that you're capturing those situations which are higher risk. And so do talk about these things. And I think that's a really, really important point, not to just focus on ticking those boxes, but engagement.
Thank you, Susie. I'm going to move. Can I move on to the next scenario? Because I'm worried with the amount of questions we've got going in that we won't cover off everything. But I'll come to you, Colette, in a second. So the second part of the scenario was things have moved on. You see a large payment from a third party on the bank statement, and your client's advised you that it's a gift from the parent. And there was the various options there. You should be able to see the options in the comments below. So I'll pick out the two that again got the highest number of answers. Most people went for option C there. 82% said speak with the parents, obtain ID and verification, and bank statements confirming the origin of funds. And then the second most popular option was D, speak with the parents and obtain bank statements confirming the funds, which is around 10%. And then somewhere around 6% was accepting the parents' explanation, but obtaining ID and verification. So again, C's the most popular option. What are people's views on that? And I should go to you, Colette, because I interrupted you rudely just before.
That's fine. I mean, I think these answers are exactly where we would expect them to be, and I think the answers are entirely logical. I mean, the question is getting at: are you identifying the source of funds, or are you doing full identification verification on the parents who are gifting those deposits? Obviously, if you're acting on behalf of a mortgage lender, that might be additional requirements on behalf of the lender. But in this scenario, we've said it's a cash purchase, so that's not relevant. But I think, this is an entirely sensible answer where it's ended up. If you feel that it is high risk, then yes, doing full verification on the parents is probably appropriate. That said, if it's a lower risk transaction, if you know the client very well, if the property is lower value, then actually just doing the source of funds on the funds coming from the parents also might be, appropriate. And I think I would just echo the points that others have made on the panel, is that the clients are clearly, well, hopefully not experts in money laundering. In the very small majority of cases they may be, but for the most part, these will be people who are focused on trying to buy a house and will be wanting to do absolutely everything they can possibly do to speed up the process, and will be keen to provide you, hopefully, with the information that you need. So just being clear as to why you're asking for that information and having a conversation about where you're trying to get to and what the client might provide to enable that to happen is going to be a really good and sensible way forward.
Thank you, Colette. Anyone else want to chip in on that one?
I think I just agree that with gifts, we know this is a challenge for firms, and as Colette says, it's about what do you already know about the clients, and Susie already alluded to. So actually, depending on what information you're already in receipt of, you might not need to do that. But it's really pleasing that firms are sort of taking that risk-averse approach. That on the face of it, those steps might need to be done. And as I think Susie coined the phrase, the comfort level or the risk appetite for the firm will certainly come into play here.
I think something else for the firms to really think about is where there's a sudden change to that. So you're expecting the funds from blah,
absolutely,
and then it changes at the last minute, and that goes all the way back to if you know and understood. If you knew the funds were coming from mum and dad in the first place, then you could ask those questions in advance, and then you would know that hold on, are those actually funds from your mum and dad, or is it something else? Remembering that you can always put almost any reference in to appear on a bank statement. So being a little bit cautious to don't just take what's on there at face value.
Which I think those that have voted, you're absolutely right, they've clearly noted that, haven't they? It was initially salary, it's a cash purchase, and I think what we're seeing is people answering on the basis that is an enhanced due diligence check. Yeah.
Well, thank you. And as I say, it wasn't a test, and there wasn't a perfect answer, but it's good to see that most people ended up in broadly the right place. Now, we've got about 15 minutes left. So what I'm going to try and do is just whiz through a few other questions we've had come in. So we'll try and keep answers fairly punchy. So first off, perhaps a question for you, Colette. Can clients be charged for due diligence costs?
Yeah, I think that's a really good question. So historically, the position of the SRA has been that clients' due diligence ought to be part of overheads. I think the way the market has moved on, the costs of doing customer due diligence is going to vary vastly compared to whether you're doing simplified, standard, or enhanced due diligence. So the position now is that actually you can pass on costs of customer due diligence to your clients, so long as that is entirely clear in your terms of conditions. And I would also suggest that firms make sure that they're aware of and are complying with any requirements in our transparency rules if those apply. But ultimately, yes, you can pass on the cost of customer due diligence so long as the client is aware that that's going to be happening.
Thank you, Colette. We've got a next question about screening, and perhaps I'll come to you on this first, Susie, and anyone else can add to that. So do we have to ask employees to now be screened who have been at a firm for many years? So they might have been there 2 or 3 decades, and they arrived predating when screening was in place. What should firms do there?
I think Amos has covered this, and it was very much focused on thinking about the risk. So that in the context of that question, there's no real information about who this employee is, what sort of role they're performing, and also what size of firm, how well you actually know them. And all of those issues really ought to be taken into consideration when you're deciding whether or not you're actually going to conduct screening of those particular individuals. I do want to make a general point about screening, which is, we've focused on DBS checks quite a lot and this sort of external provision of screening. But if you actually look at the underlying legislation, it doesn't just focus on, those external criminal checks. It's about what are they doing and performance issues as well. And so, you might want to think about the performance issues and any appraisal processes that you might have gone through with those individuals. But as I said, this will depend on the circumstances. It will depend on the employee, what their role is, the size of the firm, how well you know them, and and also perhaps those performance issues should be taken into consideration when making that decision.
Okay, that's great. Thank you for that question. Let's move on to the next one, which is around pooled client accounts. And that's a question from Kirsty. She's asked, what do the requirements for banks to collect due diligence mean for firms and individual client consent? Emesis, is that one you want to come in on, or do you want to pass the buck to somebody else?
Well, I don't know if Colette wanted to take it first, and I'm happy to add some bits at the end.
Yeah, why don't I kick off on that one? So this is not legislative requirements, it's not a legislative change directly, it's some guidance that has been brought in by UK Finance for banks offering pooled client accounts. And the guidance, I think, is actually quite helpful in that it does suggest taking a risk-based approach, so it's not a rigid requirement. But what it is meaning is that some banks are asking for additional information about the clients where they're holding pooled client accounts. A lot of banks are just implementing this at the moment, so be prepared for possible conversations with your bank. But I think, if you are being asked questions from your bank, having a sensible dialogue with them about what work you're undertaking, who your clients are, and what documents you can provide to assure them of your processes is probably a good first step.
I think I'd just add to that this is, back in the day, simplified due diligence used to be able to be flatly applied to pooled client accounts. That got pulled in the last set of regs, which was challenging. So now there wasn't an automatic approval for simplified due diligence. One of the side effects of that is that banks can apply simplified due diligence to pooled client accounts if it's low risk. The challenge there being that obviously in a lot of places law firms have been put at high risk, and even in the regs it does say that banks need to be able to request the information on the underlying beneficial owners as needed. I think to bear in mind, there are some changes that you might need to ensure that you've got. One is to make sure that your terms and conditions allow you to provide the information about your client to the banks as needed. The other thing to factor in, and this isn't something banks have necessarily picked up on significantly, but if you're holding funds on behalf of the other side or to the order of the other side, if it's a conveyancing transaction, you may in theory need to provide their information as well. So whenever you're getting funds from a counterparty, if it's not really clear, if you're holding it for somebody else's order, effectively those are funds in your client account which are held to the benefit of somebody else. You may want to factor in how you're comfortable managing that with the bank. And that comes again back to Colette's point, which is just have a sensible chat if this starts coming up as an issue. Oftentimes the banks do not want this headache at all, which is the genesis of the guidance they've helped produce. If you can show them these are the controls we have, this is something we take seriously, this is our risk assessment, our CDD processes, that's often enough to help the bank be able to be in a sensible place. And you might find that they just do dip sampling every so often. I hope that helps. That
does help. Let's move on to another question we've had, which is around US law firms and possibly differences in AML requirements there. So when a firm here is working with them on a transaction. It can be difficult to get them to provide evidence of source of funds. Susie, shall I perhaps come to you because you've got the word global in your title, so for no other reason. And again, if you want to pause or have a think or pass that on, please say so.
So I think what this is getting at is US-based firms that don't have an office here, and therefore are not, that there are no current requirements in the US to obtain sort of client due diligence information and source of funds information. I think, you know, taking the question of itself, yes, I appreciate it's difficult, but I think this is a case that you have to satisfy the requirements that actually apply here, and you have to make sure that you're fully satisfied. So you should always be looking to the SRA guidance and explaining the issue to the US firm, making sure that the client understands the reason why it's different. And I also want to say that, you know, as we sit here and sort of bemoan the fact that the US lawyers based in the US don't appear to have to do anything, there is movement. There is a proposed model rule that is being discussed between the American Bar Association and US government entities as in relation to client due diligence, and that has come out of, you know, the FATF mutual evaluations that have been taking place. And there's certainly a feeling that although the ABA had been that they had a rearguard action on lawyers doing anything, I think there's an acceptance now that this is the way forward. And so we might see some change. It might not be a legislative change. It might be this model rule that is introduced, but by all accounts, that is how firms must proceed, and, you know, from a compliance perspective in the US. So we will see some change, but in the interim, I think it's a case of sort of just trying to struggle through it and explain those issues and why it's needed, because you really do need to follow the SRA guidance on this.
Thank you, Susie. And I know that this isn't just an issue in AML. We had, I think, last year around a session where we're covering client confidentiality and conflict of interest, and that's a similar challenging one. And I know those powers of persuasion sometimes the England and Wales regulated firm has to sort of to try and work with a firm based in the US. Let's try and get through a final couple of questions before we finish off. One of them is from Janine, and that is, how detailed should the source of funds information be for a UK corporate client buying another UK entity? So, for example, if there's audited accounts evidencing how funds for purchase would come, would that be sufficient? And then the follow-up to that is, how would this differ for the purchase of a UK company by a BVI registered unlisted company? So a bit of a dense question there, but does anyone want to pick up that? Obviously, we might not be going to the full details of that, but what in general would the answer be?
I think almost the answer is the same to both. I think it's a case of, do you understand it and does it make sense? I think if it's a UK one, you obviously have almost certainly more access to more information depending on what it is, but is the size of the transaction consistent with what you know about the client and its ability to make those? Where is the funding coming from? Is it coming from the client itself? Is it coming from other lending? And can you show that? If it's from BVI company, effectively the questions you're asking are the same. Your ability to get that information from public sources is the challenge. It is the one. Do you know why it's based in the BVI? And there's many good reasons why it might be, but what is it doing? Is it consistent with its ability to do that? Do the accounts show that, or does its trading history show that? And where are the funds ultimately for that coming from? The good news is, often people start to get worried or hung up by foreign jurisdictions, but effectively the principles that you're looking to establish are still, do I understand the story? Does it make sense? And can I evidence the story when Zoe kicks the door down or knocks politely, depending on whether it's an engagement or enforcement?
We always knock politely.
Before kicking the door down.
Just sometimes, yeah, before kicking the door down. Anyone else want to add to that? And otherwise, I'll come to my final question.
Yeah,
sorry.
Sorry, Sue.
Go ahead, Zoe.
Yeah, it was to echo what Emesis is saying, but I think what we found, I think with corporates, the audited accounts can usually be sufficient, but what we have found on some files is, again, it goes to comments that others on the panel have raised, that read them and see, does that show you what you need for that particular transaction? And absolutely agree that the steps and principles are the same, and as Emma says, it's more, does it make sense, why are they using the BVI company? Just to note that we have found some firms are a bit confused as to the beneficial ownership side of this, and not so much the source of funds, and particularly where with the BVI structures there's a nominee company, and doing checks on that where it might be regulated itself, as opposed to finding the evidence of the link of the actual beneficial owners to that BVI company. So I just flagged that we just noticed that there's been a bit of a misunderstanding. So firms to be aware that that's what they're looking, who are the obviously the ultimate beneficial owners, and can I evidence that alongside the client's explanation, because of it being this slightly riskier structure, which may be perfectly legitimate, but I think that's very important in that kind of a situation.
So let's just cover off one final question, and I suppose it's apologies to end on this note, but I just wanted to talk about the impact of Brexit is obviously coming soon. Beyond the fact I might be buying a few extra cans of tin tomatoes and olive oil, from an AML perspective, what does Brexit have any impact?
So probably less of an impact in this area as others. The underlying money laundering regulations will still remain the same. We understand that we won't be implementing the 6th money laundering directive from Europe, and that's primarily because the UK legislation already covers the necessary provisions in the EU directive. So no changes directly from that. The thing to be aware of, I think, is probably some of the shifts in financial sanctions legislation. So the underlying legislation there is changing. So 2 points to be aware of. If you are yourself checking the lists, make sure that you're checking the correct sanctions list post-Brexit. Or alternatively, if you're using an electronic customer due diligence service, make sure that your provider is shifting over to the correct lists. But I think those are the main things to be aware of.
If I could throw in on that, anybody who uses an automated regular screening process for those, please be aware that the names, because it will be effectively a new list, so if you have a hit against somebody that you have whitelisted or decided is fine, you're going to get those hits all over again, because they're going to come up on effectively a new list. So the designation will be slightly different. So just be alive to that. You may find yourself suddenly getting lots of hits that you had previously whitelisted, which you may need to do again or review.
Thank you, Emesis. And I think we'll call the session to an end there. I mean, I don't know how our audience has found it, but I found that an absolutely fascinating session. Thank you, Zoe, Colette, Susie and Emesis, for all your contributions. I think what I took from that session, if I was going to say there was loads to take, but one of the main things was AML certainly isn't a tick box exercise. There certainly isn't always a clear black and white right answer. But I think, as you said, Emesis, getting that story right and being able to justify the approach you're taking in relation to the rules and regs is absolutely vital. Thank you for everyone who asked questions. If your questions wasn't answered, we will try and have a look at those and see what further we can do. But if you've got a particular case, you can always phone our ethics helpline. I have to give a shout out to probably the best comment of the day, and Susie, you'll enjoy this. We've had some love for your background or your wallpaper coming in on the comments, so thank you for that. I think you've definitely upstaged the whiteness that's behind much of the rest of us, and you've also upstaged my shirt, which is very disappointing because that was my plan for today. So I hope you found AML2 a rewarding session. Please let us know whether you did or you didn't. There's a link below to put in feedback. That's absolutely vital for us for working out, does this work? What could have been improved? It's also nice when the speakers have spent so much time talking through that to find out whether it is useful for people. It'll only take a minute to fill in, so that'd be great if you could click on the link below and do that. And finally, just a heads up, we've got a session at 2:30, which is your compliance queries. That's going to be covering issues such as managing succession and adequate and appropriate insurance. So I look forward to some of you joining then. But otherwise, thank you, everybody, and goodbye and have a good afternoon.